is the 2022 cash budgeting Oak Limited question. Now this was from the Deferred paper in the summer. So a different question came up in the Leaving Cert exam in June. So this was just an additional paper that was set by the department for during the summer for people who could not sit the first one. So always good to practice these ones as well. So Oak Limited is preparing to set up business on the 1st of the 7th, 2022 and has made the following forecast for the first 6 months of trading. So we have sales 480 in July, 560 in August, 576 in September, 580 in October, 600 in November, 650 in December, 3446000 total. Purchases, you've got 288 in July, 336 in August, 345 in September, 350 in November, 350 in October, 360 in November, 380 in December, and 2059000 in total. Part 1 says the expected selling price is €80 per unit. Part 2 says the cash collection pattern from sales or debtors is expected to be cash customers. So 30% of sales revenue will be for immediate cash, and there'll be a 5% cash discount allowed when they have cash customers. So if a cash customer pays them in the month of sale, they will give them a 5% discount on the 30% of the sales revenue that they pay. Then you have credit customers. So 70% of sales revenue will be from credit customers. These debtors will pay their bills 50% in the month after sale and the remainder in the second month after sale. Number 3 then says the cash pattern payments pattern for purchases is expected to be credit suppliers. The purchases will be paid for 50% in the month after purchase when a 2% cash discount will be received. The remaining purchases will be paid for in the second month after purchase. Number 4 says expenses of the business will be settled as follows. So we've got expected costs. Wages, 40,000 per month payable as incurred. Variable overheads, €10 per unit payable as incurred. Fixed overheads, including depreciation, will be 80,000 per month payable as incurred. With regards to capital costs then, machinery costing 40,000 will be purchased on the 1st of the 7th, 2022. The machinery will have an estimated useful life of 5 years and a residual value of 2,200. This will be partly financed by means of a loan of 24,000 at 6% per annum. The capital sum is to be repaid in 12 equal monthly instalments commencing on the 1st of the 8th, 2022. The interest for each month is to be paid on the last day of that month based on the amount of the loan outstanding at that date, commencing on 31st of the 7th, 2022. Okay, so let's get going. So part A is asking us to prepare a cash budget for the 6 months, July to December 2022. Okay, so a cash budget is basically just about cash in and cash out. So majority here, this is our cash in part here, obviously with our sales here, and then as well as the purchases information, all of this then is all of the cash out. So cash budget, we are just concerned with cash. That is it, just concerned with cash. Okay, so no non-cash items such as depreciation was mentioned down here, discount allowed, discount received. They are non-cash items, so they will not be going into our cash budget. Okay, so this is how your cash budget is going to look. You will get some lined paper, okay, and so you will be writing all of the bits and bobs in here. So these are the receipts and payments that we heard about, in the question. So what we do when we have the receipts, we'll just tot up the total receipts. When we have the payments, we'll tot up the total payments, and then total receipts minus total payments is equal to net cash. We're going to have a bank loan. We're going to have opening balance and closing balance. So we'll work through all of this now together. So firstly, looking at the cash in, okay, we are taking a look at the sales line here. So the 480 in July, the 560 in August, the 576 in September, the 580 in October, the 600,000 in November, the 650,000 in December. then we're looking at part 2. Okay, so we'll take a look at that now on the next screen. So part 2 says cash customers, 30% of the sales revenue will be for immediate cash, and cash discount of 5% will be allowed. So if you put into your calculator 480,000 multiplied by 0.3 or multiplied by 30% or however you want, and then multiply that by, if you multiply it by 95% or by 0.95, you're going to get how much your cash sales would be. Okay, so into your calculator again, 480 multiplied by 30% multiplied by 95%, you're going to get 136,800. Now, then for credit customers, it says 70% of sales revenue will be from credit customers. These debtors will pay their bills 50% in the month after sale and the remainder in the second month after sale. So you'd have your 480 again, so 480,000, right, multiplied by 70%, okay, or multiplied by 0.7, okay, and then multiplied by 50. So it's like 35% and 35%, right? So that's how that would work. So 70%, but half of 70% is 35. So 70% multiplied by 50% multiplied by the 480, and you would get then 168,000 and then 168,000. So if I was just to write the workings up here, it would be whatever the sales is, okay, multiplied by 30%. This is the cash sales receipt, okay, and then multiply that then by 95%. That would be exactly how we would work that out, okay. And then with the credit sales, it would be, multiplied by 35%, which is 70% multiplied by 50%. So that's how it is. So whatever the sales is, you do those maths on it, and then that's how we get those figures. So it's very time consuming on the calculator. You find H1 people making mistakes because it'd be very easy to leave out a zero, or to change figures around, or write them in the wrong places or whatever. I would suggest, if you have a black and a blue pen, that you would write one of the month's figures in blue. So see here, I'm circling this blue, maybe you could write that blue, and then the next time you could write the next one a different color, just so that they stand out for you. So that is how we would do the cash sales. So it just takes a little bit of time on the calculator, and again, whenever you finish this, before you tot up the total receipts, it would be very, very, very important for you, okay, to just go back and put everything into the calculator again. 480 multiplied by 30% multiplied by 95% is 136,800. Brilliant. And then 480 multiplied by 35% is 168. And then 480 multiplied by 35% is 168 there as well. So you're going back and you're checking, you're going back and back and back and back and back. And so you're just making sure that everything is correct. Okay, so that is the how you do the receipts part. Okay, so moving on then to the payments part. So we're going to be looking at the purchases figures here. So 288,000 in July, 336 in August, 345 in September, 350 in October, 360 in November, 380 in December. Okay, and it says number 3 here, the cash payments pattern for purchases is expected to be. So here's information on credit suppliers. So the purchases will be paid for 50% in the month after purchase, when a 2% cash discount will be received, and the remaining purchases will be paid for in the second month after purchase. So this will be, by 50% the month after, all right? 50%. And then the second month after will be multiplied by 50%, and then we will multiply it by 98%. Okay, because you get a 2% cash, or sorry, this one here is by the 98%. You get your 2% cash discount there, but then the 2 months after, you don't get a discount. It's just you're paying your 50% there. Okay, so here are my figures. So going back, you know, you're not paying for anything in July. The first time you pay for July's purchases is August, and then the second time you pay for July's purchases is September, and so on and so on and so on. Okay, so you just have to make sure that you are multiplying your purchases figure for a month by 50% multiplied by 98%, and then multiply it by 50% for the month after. And so again, it's just very, very important that you are checking these things twice, okay, to make sure that you have not made an error on the calculator, because when you're on the calculator a lot in a question, it is just very, 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 very easy to it's just very easy to make the mistakes. So that's important to ensure that you do that. Okay, we'll move on then to wages. So in expected costs, we've got a good few costs here. So wages, 40,000 per month, payable as incurred. So wages, 40% per month, payable as incurred. So that's just easy. 40, 40, 40, 40, 40, 40. And then if we want to tot it all up here, 240. Next, we have variable overheads. So it says here, variable overheads, €10 per unit, payable as incurred. So we don't know how many units have been incurred every month yet. So they haven't told us how many units are, we haven't told us how many units that we have. So we need to figure out, right, how many units will we have, okay? So if you look here, you've got 480,000 sales, and it's telling us in part 1, expected selling price is €80 per unit. So if you put in, okay, 480 into your calculator, 480,000 divided by €80 per unit, you have 6,000 units, okay? So you have 6,000 units here in July. So 6,000 multiplied by then €10 per unit will be 60,000, okay? If you take your 560 in August divided by €80 per unit, you're going to get 7,000 units. Multiply that by 10, you get 70,000. 576,000 divided by 80 is 7,200. Multiply that by 10, 72,000. 580 in October divided by €80 is 7,250. Multiply it by 10, 72500. 600,000 divided by 80 is 7,500. Multiply it by 10, 75,000. 650,000 in December divided by 80, and that is 8,125. Multiply that by 10, 81,250. So that is how you do the variable overheads. So we have to use some information to tell us how many units we have, and so that's how we would do it there. Okay, the next part then is fixed overheads. So it says here, okay, fixed overheads including depreciation will be 80,000 per month, payable as incurred. Okay, so fixed overheads including depreciation, 80,000 euro per month as incurred. Now we have to remember here that depreciation is not a cash item. Okay, depreciation is not a cash item. So what is it? It's a non-cash item, right? So depreciation is a non-cash item. That is, you know, very important to remember. So we have to take depreciation out of this cash budget, right? It has to come out of this cash budget. So if we're reading this, okay, we say, right, well, what do we depreciate? We depreciate fixed assets, right? So we have to look in the question for any information about fixed assets. You'll see in the next one, this information here, so this couple of sentences here will tell us all about the fixed assets. So it says machinery costing 40,000 will be purchased on the 1st of the 7th, 2022. The machinery will have an estimated useful life of 5 years and a residual value of 2,200. Okay, so this should help us work out how much depreciation is per month. So if the machinery cost 40,000, okay, so that's how much it cost. Now it's telling us it's going to have a residual value or a scrap value of 22. Okay, so it's got a scrap value of 22. That means that over the course of its lifetime, it will depreciate by 37,800 euro. Okay, so it'll depreciate by 37,800 euro. Now, it's going to have a useful life of 6 years, which is 60 months. Okay, if I divide that then by 60 months, I'm going to get that my depreciation per month would be 630 euro depreciation on that machinery per month. So that is how we would work out how much the depreciation on the fixed assets are. So therefore, my fixed overheads including depreciation, 80,000 euro. My fixed overheads without depreciation, without the 630 depreciation, is 79,370 euro. So 79,370 euro is going to go into every single month there. Okay, and that is 476,220,000 euro. Okay, so that's the fixed overheads. Now, machinery is next. Machinery costing 40,000 will be purchased on the 1st of the 7th, so the 1st of July. Okay, and so that's the only time they purchased machinery, 40,000 total. Now this is these next parts. This is the part that students run into difficulty with. Okay, so we'll take very special care to go over this. Okay, so the machinery is going to be bought in 40,000. That's grand. That information is brilliant, right? But this machinery will be partially financed by means of a loan of 24,000 at 6% per annum. The capital sum is to be repaid in 12 equal monthly instalments commencing on the 1st of the 8th, 2022. So if we're just talking about loan repayments, right? The loan was 24 and it's going to be repaid in 12 equal monthly installments. Okay, so 24 divided by 12 is 2,000 per month, commencing then on the 1st of the 8th, 2022, so the 1st of August, right? So 2,000 starting on the 1st of August, nothing in July. So 2,000 in August, 2,000 September, 2,000 October, 2,000 November, 2,000 December, 10,000 altogether. Okay, then the interest then. So this will be interesting, right? So this is one that students really struggle with. So be partly financed, the loan of 24 at 6% per annum. Now, we've already dealt with the capital sum to be repaid. We've already dealt with that. But it says then the interest for each month is to be paid on the last day of that month based on the amount of the loan outstanding at that date, commencing on the 31st of the 7th, 2022. Okay, so for the first month then, okay, so it's commencing on the 31st of July, so we're going to start paying it in July, okay, but July's payment is going to be the 24,000. So if you put into your calculator 24,000, okay, then you're multiplying that by 6%. So multiply that by 6% in your calculator, or 0.06, and then you're going to multiply that by 1/12 because it is for 1 month, okay, and that'll be 120 euro. Now, in the next month, then you're going to have 2 grand taken off that loan, right? So you're going to have 22,000 multiplied by 6% multiplied by 1/12. Okay, so 22,000 by 6% by 1/12. All right, and that'll be 110 then. Okay, and then you're going to have 20,000 by 6% by 1/12. Okay, and when you do all that out, you'll see that it's reducing by €10 each month. Okay, so it's just very important that you take the 2,000 off that is repaid, because if it's based on the amount of the loan outstanding at that date, it's just very important that we have, it's very important that we have the 2,000 coming off each month, and it's very important that you're multiplying it by 1/12. So some students forget to just do it per month and they do it per year, and it's a huge amount of interest. So you can see here 120 in July, 110 in August, 100 in September, 90 in October, 80 in November, 70 in December, total 570. When you top all of them up, then total payments 219,490, 332, 600 in August, 502,110 in September. October, you've got 531,010. In November, 540,450. In December, 554,090. And so that's it, right? Now, your net cash is your total receipts minus your total payments. So you can see here, in July, you're going to have a huge deficit. In August, you have a small deficit. September, October, November, December, not looking too bad. But July's huge deficit has probably got to do with the fact that we have machinery bought, 40,000, and that we're just not collecting a hell of a lot of money from our customers at that stage as well. Now, we did get the bank loan of 24,000 in July, okay? We had no opening balance. So this question did not say that there was money, there was going to be cash at the start of the year. So look, how we get the closing balance then is we have the net cash of 82,690. We add the 24,000, so that is minus 58,690. Then that is going to be the opening balance in the next month. The closing balance in the previous month is going to be the opening balance of the next month all the time. Okay, so all you do every single month is you just get the net cash, and you're doing whatever you have to do with the opening balance, whether it be plus or minus. In this case, in August case, it's minus, and that's giving you minus 63,690. Then in September, you have a net cash of 26,050. You have an opening balance of 63,690. That gives you a closing balance minus 37,640. In October, you've got net cash 31,890 minus 37,640. That gives you minus 5,750. November, you've got positive 35,150 in the net cash. You've got a deficit opening balance there, 5,750, giving you a closing balance of 29,400. In December, you've got 44,160 net cash. Then there's no bank loan here. Opening balance then 29,400. Closing balance 73,560. So that is how you do the cash budget. So one word of advice, the tough parts here where students really make mistakes is they don't take the depreciation out of the fixed assets. They might mess up the loan repayment and interest. So take very good care about on the calculations of the interest and when did the dates start, etc. And also, just make sure that you're checking everything twice, because even H1 students can make mistakes with the figures there. Okay, so that is the cash budget complete. Part B of this question says, prepare a budgeted profit and loss account for the 6 months ended 31st of the 12th, 2022. So, budgeted profit and loss, sales, less cost of sales is equal to your gross profit, and then less expenses. So it's important to note here that in a budgeted profit and loss account, we can have cash and non-cash items. Okay, so we can have cash and non-cash items. Very important to note that. So we will have depreciation in here. We will have discount received. We will have discount allowed. Okay, so very important to note that. So Our sales, we have 3446000, less cost of sales, so we've got the purchases 2059000, giving us a gross profit 1387000. Okay, and then with less expenses, we'll have wages, so we have the 240 here. We have variable overheads for 3750. We have fixed overheads 476 220. Now, depreciation, we had depreciation of €630 per month. Multiply that by 6 months and we get 3780. Okay, so that is a non-cash item here. Okay, non-cash items do go in the profit and loss account because they are non-cash expense. So we do have to account for it here. Discount allowed, then we give discounts to our debtors. Okay, so the sales that we have for 3446000, we had cash customers of 30% and 5% of them were given a discount, so that's 51,690. So 1202,440 is the total expenses there. Then add income, so we have discount received. So we have purchases of 2059. However, we are not going to receive the discount that relates to December because that will occur in the January of the next year, because we're going to be paying that 1 month after. Okay, so December's discount we won't get until January, and it's not relating to the current year. So what we have to do is 2059 minus the 380, and so you're just left with these 5 months here worth of purchases, and then you multiply that by the 50% of cash purchases multiplied by 2% discount that we were receiving from our creditors, and that's €16,790. And then last but not least, you have the interest of 570. Okay, that's given us a net profit of 200,780. Now, if you mess up the cash budget and say you got the wages wrong and variable overheads, well, the wages were given to you, so that probably must be correct. But if the variable overheads, you got them wrong, but you put in your own incorrect figure here, you would most likely get that absolutely perfect. So you would be getting full marks for that. Okay, so they don't penalise you twice. If you make a mistake in the cash budget, they most likely won't penalise you here. But this last figure here, there's probably bonus marks for people who got it all completely right there. So that's the budget profit and loss account of Oak Limited for the 6 months ended 31st the 12th, 2022. So the last thing that we have to do then is part C, which is the theory. So C part 1, explain what is meant by the term principal budget factor. Give 2 examples other than sales. And then part 2, on the basis of the cash budget that you have prepared, what advice would you give to Oak Limited? Okay, so what advice would you give to Oak Limited? Okay, first of all, what is the principal budget factor? So the principal budget factor is the aspect of the business that limits or constrains the activities of the firm. Okay, so sales volume is the most common principal budgeting factor. So if we only know we're going to sell 10,000 units, we're only going to make 10,000 units. All right. So that's the most common principal budget factor and is usually the starting point in the budgeting process. Other examples include the output capacity of the machinery. So how much can the machinery actually cope with? How many units can the machinery actually make, right? The amount of the raw materials available. So what raw materials do we have to make the goods? Okay, there might be a problem getting raw materials in. Okay, so that would seriously limit how much you could actually make. The availability of skilled labour. So if there's not people around to do the work, you can't actually get the work done. So you won't be able to make the goods. The ability to dispose of byproduct. So like if there is byproduct there from the raw materials, anything that you don't use, how easy is it to get rid of that stuff? So if that causes an issue and it's hard to get rid of that, it might limit how many goods you can make. And then the carbon emission of the firm may become important, limiting factors in the future. So there could be a lot of legislation in place environmental legislation saying you can only produce X amount of goods. So if that is in place, you can only produce X amount of goods, and therefore that is a principal budgeting factor as well. Okay, part 2 then says, on the basis of the cash budget that you have prepared, what advice would you give to Oak Limited? So it is very, very, very important here that people use figures from the question, okay? Because a lot of people will not use figures from the question, and therefore they get absolutely no marks whatsoever. Okay, so very, very, very important here that you do that. So let's have a look. So we've got serious cash shortages in July, 58,690. Serious cash shortages in August, 63,690. September, 37,640 minus, and then October, 5,750 minus. Okay, so business obviously needs to increase the cash receipts and it needs to decrease the payments, reduce the cash expenditure. How should they do that? So how should they increase the receipts, right? They should change the credit terms for debtors to encourage more prompt payment by offering a bigger discount than the 5% currently allowed. They should agree better credit terms with creditors by negotiating a longer period of credit received. So, instead of paying all of this money to creditors, can they organise to pay a little bit less and over a longer period of time? They should look at the wage bills. The wages were 240. So can they be reduced? They should hire the equipment. So I would be mentioning 40,000 equipment here. This is from the market scheme, but I would say machinery that costs 40,000, potentially could that be leased instead? So you're paying a certain amount each month instead of getting the 40,000 and then getting the loan and having the interest on the loan also. So look, I'll read out what they had in the market scheme. They should hire equipment instead of buying it to reduce cash expenditure and spread the payments over the life of the asset, which is 5 years instead of the 1 year repayment period for the loan. The company could also delay the start date for the repayment of loan or repay the loan over a longer period of time. They could arrange a maximum bank overdraft of 63,690, which according to these forecasts could be repaid very quickly, as by the end of December there is a forecast cash surplus in the business of €73,560. So that is the 2022 cash budget complete.